All right, everyone. Hope you're doing well. Today we are going to talk about payment shock savings. All right. Just remember that NACA is a financial counseling organization as well as a home ownership organization. So because the foreclosure rate is so low, they make you prove to an extent that you can make your mortgage payment without struggling. And that's where payment shock savings comes into play if you're ever going to have a mortgage payment that's higher than what you're currently paying for rent. And that includes if you're not paying anything for rent right now, then you're going to need payment shock savings. So if you're paying rent, how long? It's 3 months. And if you're not paying rent, then the payment shock savings is going to be needed for 6 months. All right. So payment shock savings, at least in this edition, is going to be found on page 20. Right. Bam. There. It might be easier if I actually use my tools here. So you saw it. Payment shock. It's not going to work. Okay. Hold on. Payment shock. Bam. And it's on page 20. Okay. So we're going to turn to page 20. Just wanted to do that. So what is payment shock? Well, payment shock is your desired mortgage payment. So let's say, well, I want to have a mortgage payment of $1,500, but my current rent is $1,000. So math, right? Desired minus, so we subtract the 1,500 minus the 1,000, and you end up with $500. Okay, so our underwriter is going to say, well, this is what you want to pay, but right now you're only paying this, so you're going to have an added level of financial obligation that you do not currently have. So you have to show that you can pay this. Now, if you're already paying rent of $1,000 and you've been saving $500 for the last 3 months, you can use that. You just have to show that in your last 3 months of bank statements. But if you have not been saving this, then you need to show this that you can save this for 3 months if you're paying rent. Again, if you're not paying rent, then you need to save the whole amount because right now your rent is zero, right? So if you were paying no rent, then you would have a zero there, and now you would have to save the whole mortgage payment, right, which would be $1,500, right, for 6 months. So no rent 6 months, rent 3 months. All right. Now, later on, we're also going to talk about one-time withdrawals because these are huge. There's a lot of confusion about what one-time withdrawals are. And here at the bottom of page 20, it says that these withdrawals occur due to one-time circumstances, right? Like paying off debts. Notice it doesn't say paying down debts. Sometimes if you pay down debts, you'll get a fight for that sometimes. But if you pay off debts, look, that's on page 20 in your book. You can use that. Okay? So while this reduces your total savings, so let's say, well, you could have saved that $500, but you paid off $300 in debt. Or even if you paid $500 off in debt for that month. So it reduces your savings. It does not impact your overall savings pattern. Why? Because it's a one-time withdrawal. It's not going to happen again because you paid debt off. Okay? So, but you will need to document this. So documentation to verify the withdrawal will be required if the bank statement does not document to whom the payment was made. So if we don't know where your payment went, then you're going to need to prove it, document it. Okay. On the other hand, there's a one-time deposit, and these are what really get people into trouble. Not into trouble, but really give people a difficult time of qualifying, especially when tax season comes. So as you see here, these documents are one-time occurrences that you cannot anticipate occurring on a regular basis. So if you're getting money from tax, these are deposits. So you're receiving money from tax refunds, or someone's just giving you gift. You got a sugar daddy, a sugar mama, right? Thus, your payment shock savings pattern is reduced by the deposits, which inaccurately increase your regular savings pattern. So normally you would be saving $100 a month, right? But you got a tax refund of $5,000 a month. And you go out, got your chest puffed out. I got a lot of money in the bank, NACA. Well, from our position, we say no. You have whatever you have in your bank. We're going to subtract that $5,000 because you cannot anticipate on receiving that on a regular basis. Not only that, but we're going to make you write a letter of explanation indicating the source of the funds, and supporting documentation will be required to use these one-time deposits towards satisfying a minimum required funds and or buy down. So there are two issues here. One is that for payment shock savings or payment savings pattern, one-time deposits cannot be used. So you get your tax refund, your dad gives you a gift, right? Or a family member gives you $5,000, $10,000, $20,000. We say that's great, but you cannot use that for your regular savings pattern because it's not consistent. It might last you a year or 2, 3, 4, 5. It might last you 10 years. We've had people at NACA who have gotten denied. They've had 6 figures in the bank, over $100,000, and we said, so you're spending $10,000 a month, right? You're going to be broke within the next 2 years. So we are concerned about your savings pattern. How does that look? It's either 3 months or 6 months. Okay? So minimum required funds. However, you can use those funds, these one-time deposits, tax refunds, gifts, for your minimum required funds and or to buy down. Okay? So if you want to read more about that, page 20, 21 in your books. Now let's take a look at what that looks like in practice. Okay, so bank statements. Here we go. So we're looking at a credit union account here. And this credit union account, that's the wrong page. So we're going to look at the first page here. Presentation is not as smooth as I like, but you're going to get some good information here. Okay, so on a credit union account here, notice that there are 2 different accounts, right? This is a share account, also known as a savings account, and then we have a share draft, also known as a checking account. And what we are going to do, or what you can do, we're going to look at your balance. So at the end of, the new balance. So at the beginning of the month, this member had $1,500, and they put in some deposits here, but these were all transfers. So they're transferring from one account to another, and so we say, okay, well, if you're just juggling money from accounts, it doesn't matter. By the way, moving money does not help you from one account to another in and of itself, because that's not true savings. And we'll look at that right now, actually. So let's say, what month is it? June? So let's say in June, actually I'm going to go back 1 month, I'm going to say May. So in this person's account, actually, yeah, for the sake of example, let's say $1,500. So $1,500, actually, yeah. I'm going to say May, June, and this is going to be savings, and this is going to be checking. That's what it says. It says checking, okay? So this is savings, and this is checking. All right, so let's say you got, a lot of people do this. This is not saving. So let's say they have $1,500 in their checking, and they're like, okay, well, I'm gonna save $500 in my I'm going to say $500. So I'm going to move $500 from here to here. And so if you take away $500 from checking, now you have $1,000. Right? So he moved, or she moved, $500 from checking to savings. But how much money do they have total? They still have $1,500. Did they save anything? No. So you can't move you can't move money from one account to another account and call that savings. That's not true savings. Savings is the increase of monies from one month to the next month. So what we're going to do is look at June. Well, how much money do you have in June between both accounts? So if this account went up, notice it's a checking account. This is where he gets his money, or she gets her money from. And she says, well, I got paid $5,000 and then I did all these expenses. But at the beginning of June or at the end of May, I had $1,500 here, and my savings from my savings account stayed the same at $500. Now you got $2,000 between both accounts. And the difference between this month and this month now is your actual savings. So we look at your bank statements to show that. Notice, now that's $500. And notice, it doesn't matter where you save it. You can save it to that account or this account. By the way, if you're one person, you should not have more than 2 accounts, because it's going to get very, very frustrating. Limit your accounts with NACA as you go through this process. If you start getting 5, 6 accounts, this process gets very, very difficult. Okay? So in this account, right, we see that this person had $1,575 and $1,500 here. They were all transfers from his share account. And so that's $75. And in the share account, the previous balance was $2.02. And so we go through this. In the end, we see $823. So this person saved about $822. All right, so $800 in the share draft account, and then they saved another $75 here. So altogether, they're about $877, right? But now we're going to look. Where did these savings come from? Does it come from his or her? We'll call him his. Does it come from this member's payment, like their actual work, or are they getting some type of tax return or supplement? And so we look at this. We say, where did this person get money? Okay, spending. Good. Spending, ATM purchasing. We don't care what you're buying money. As long as you're saving, it's easy. All right, so they have money coming in there, and that is from the job, so there's no problem with that. All right, let's look at the same next page. Good, negative. They got a check coming in here, some other check. We see where that's coming from. Good. Right, so what I'm looking for now are cash deposits. If he's got any money going on, it's a sign of money laundering. That is no good. Beautiful. Okay, good. So this person has all payroll stubs, pay from pay stubs. So this is going to be a clean bank statement in that sense, and they saved $800. Okay. Good. Now let's look at this person's account. Notice they labeled it savings. This is my savings. Don't get confused, NACA. They did that. The member did that. Okay. So look, right here, they've got transfers coming in. That means we know it's from one account to another. $25 goes from 25 to 1225. So this person saved $1,200 in their savings account, plus $1,200. Okay. And now we're going to go to the checking account, ACH transaction. So deposits. Look at this. Just got cash apps coming in. So when the underwriter sees this, he or she can possibly be petty It's petty because it's only $5.38. You can push back on that because um, that has no impact, great impact on savings pattern, right? The easiest thing is just to say, okay, we're not going to count that, rather than source it. All right. But also Cash App does provide statements, and those seem to work well also. But this person has a lot of Cash App. These are deposits, and then we see the IRS. So look at this, 1559. So now their total savings pattern now is decreased because they're not going to get this every month. All right. So now this 1200 that they saved here, now you're going to be negative 1300 now, or negative 300, because we got to subtract this amount. So we're looking, and again, this can be used for closing. By the way, this person already bought a house too. So they got a lot of transfers, InstaCheck, purchase. Okay, so now we're at the debit. All right. So these are the expenses coming off. Good. Again, we don't really. There's their NACA fee. All right. So at the end, so it looks like, I mean, they've got some Cash Apps, so we would have to take all of these out. The transfers, those are fine. The deposits, that means, well, ATM transfer. Oh yeah, it's online. Okay, so that's fine. But these Cash Apps, unless she can show and document where these are come from, then we got to take these away, because it could be money laundering for $11. That's the way that underwriters think. It's highly unlikely that you would be money laundering for that amount, but we got to follow the rules. Okay. So in the end, this member, he started off with in their account, the beginning balance was $485, and then they had these deposits and these miscellaneous, and so the ending balance was $413. And then when you take this and you subtract the cash deposits, especially the IRS deposits, this person actually lost money. They lost about $1,100, right? And so if we say, well, they lost $1,100 in this account, and then they gained $1,200 here, well, in reality, their true savings was only $100. So hopefully they don't need payment shock savings, or they are going to be headed for a difficult journey. So how do you document payment shock? Okay. No, I'm sorry, not how do you document payment shock, but how do you... So we're going to stick with this one. So let's say that this person, right now, from our perspective, they lost $100 in their savings. So what they're going to have to do is go through their bank statement and say, well, let's look at my debits. Okay, well, grocery store, well, I need food, so I can't, that's not a one-time withdrawal. McDonald's, yeah. Sam's Club, I can't really. Amazon, well, let's see, what was this? Online transfer, well, that just went from one account to another. Those monies went from one account to another. I can't really write those off. Well, alright, so this person just has a lot of small expenses, right? $100 right here, Cash App. Okay, so let's say that this Cash App was a gift, alright, to the sister. Alright, let's say it was a gift to your sister for $100 there. Well, they can say, the rest of this is food. Wrong. Okay. Well, you can do what's called a one-time withdrawal. One-time withdrawal. One-time withdrawal. Okay. One-time withdrawal. And the one-time withdrawal is going to have like the amount. It should identify the account. So this is this person's account number. It's account number, and there are a number of different ways of doing this document. Account number XXX, whatever the account number is. And we're just going to say 24. Okay, and it's got her name and her NACA ID here, and then it's going to say there's a lot of different ways of doing this. It was $100, right? So $100. $100. The date. Just gonna say 5. Yeah, we'll make it what it was. 2/28/20. And then the reason or the purpose. All right. So, and the amount. Okay. So, well, on 2/28, I spent $100, and this was a gift to my sister. All right. I don't see any other places where it's a lot of Chick-fil-A, JJ Fish and chicken bones, Amazon. Maybe there was an Amazon purchase. Maybe the Amazon. So there's another expense here for Amazon. There was on, let's say 2/15/20, and that was for $61. We round. We don't use cents. So $61. And this was an Amazon purchase. So Amazon, this was another gift to son. Gift for son. You bought your son a Fire Stick or something. All right. So now I can add these most of the time. If they were true one-time withdrawals, then I can add an extra $161 to the payment savings or the savings pattern. So we come back here. So now my total savings is plus 161. So now I'm at a total of $61 for this month. And it's getting a little messy. Hopefully you're following me. But I just wanted to give you a better idea of how savings patterns work and the different things that you can do to increase your savings pattern. Right? If you ever come into an emergency, your car broke down, you're giving a gift away, or whatever the case is, when you have one-time withdrawals, then you can document them here, and it increases your savings pattern. Okay? It is up to underwriter discretion to choose whether or not he or she truly sees these as one-time withdrawals. I've had people who have one-time withdrawals, like they're just cash apping, just family members, like 2 or 3 times a week, and there's a point where that no longer becomes a one-time withdrawal, and you just need to save those funds. And the theory behind it is, hey, once you're paying your mortgage, right? Bank of America is not going to be like, oh, well, your mortgage is $1,500, right? And you say, well, I only got $1,000. But my car broke down, so I'll give you can I do a one-time withdrawal? Right? They're not going for that. You need to have all the money. So as Mr. Cunningham likes to say in North Carolina, NACA would rather reward good behavior than to punish bad behavior, which would happen in this situation. You would get punished. Okay? So stick it out. The easiest way is just to save those monies straight out, right? So you don't have to do these charts and go over your bank statements. That's why we encourage you to do this in the beginning with your budget, because if you're saving the amount and it's that you need for your payment shock, and it's each month, and it is from your income, right? Not from gifts, not from tax returns, then you will show your payment shock savings successfully, and you will have a much easier time getting through the NACA process.